Welcome back, everyone, to the Investing Show. I'm Simon Severino, and today I want to answer your questions around credit spreads, specifically the ones that we use in the Sprint Club. So I'm gonna do live in front of you and with you some bull credit spreads so that you learn the method, which is quite repeatable and quite doable for any size of any portfolio. Works with $1,000 portfolio, works with $100,000 portfolio, works even better with $1 million portfolio. So let's do it, right? I'm sharing with you something that I share with our members in the Sprint Club, which is the whole strategy and tactics on how to sell put bull spreads. This is part of what we call the options guide, and you can download this options guide. It shows you how to be the casino, not the gambler. It covers money management rules, how to sell defined options, undefined options, and advanced strategies, as well as some books. This method helped us make 50% annualized, which means if we do that on repeat, and it took us 10 minutes a day, then we can double our net worth every 2 years. So that's a repeatable method for compounding, right? If you stay long enough, I will show you also one bonus, which is the money management rules. Most traders, they blow up because they don't have money management rules. But you came for the credit spread, so let's go to the credit spread. First of all, is it more efficient than a cash secured put? Yes. Is it more risky? No, it's defined risk. So how to do it? You select a very liquid underlying. What is a very liquid underlying? Let me show you with the example on IBKR. So I use Interactive Brokers. I'm not paid by them. I think it's a very old UI and UX, but it's the most capital efficient and it is the most trustworthy for me. So on my watch list here, so create your watch list, right, of your favorite underlyings, and now rank them by volume. The highest volume is Tesla, the Nasdaq, AMD, Google, Tesla, Meta, Anet, and usually Nvidia, right? So these are the highest volume stocks. And a pre-trade plan is really going to your watch list and looking at the highest volume and the highest IV rank. So you look at volume, for example, TSLL, which is a leveraged Tesla ETF, would have highest volume and a very high IV rank of 39. So that would be my trade for today, actually. I would sell a cash secured put or a bull spread on TSLL. Right now the markets are closed, so we can't do it, but I can show you how we would do it, right? So we select a very liquid underlying, and you just saw how to do that. Okay, check. Now, we want to double check. Yes, high volume, we know it, but high IVR, we just did it, implied volatility rank. But we want to double check that there is no earnings in the next 45 days because that brings extra risk. We don't want extra risk. It's a low risk method. And also the tied bid-ask spreads. How do you do that? So the bid and the ask here are 1 cent. This is perfect. Doesn't get better than that. So we double checked. The bid-ask spread is tight. Volume is high. IV rank is high. There is no upcoming earnings. Well, be careful. This is an ETF on Tesla, so we have to go to Tesla and check when are Tesla earnings. Turns out they are in January. So that is 60 days from here. We can sell a 45 days bull spread. Because we go out 45 days, we're safe. So that's the method. So we selected the very liquid underlying. We double checked all the things that can go wrong. Now we go out 45 days. How do you go out 45 days? Let's say we would select TSLL, but market is closed, so we can't do it right now. But let me show you how you would do it. So 44 days would be January 9, or 51 days, January 16. Let's go with 44. Now on this side, you see the puts, and on this side, the calls. We sell a put at 30 delta. Now, we don't have live market data right now because markets are closed, but we scroll up to a 30 delta. Current price of TSLL is $17.93. We scroll up until we get to a 30 delta. It will be around here, around 14. And then we move to the left until we sell the first put. And now you select the spread. It's called a spread because you either right now have 50 cents of a spread or $1 spread. Let's say you want to go for a $1 spread, then you would be selling the 14 put and buying the 13 put. Sorry. So it's two legs. You're selling the 14 put and you're buying the 13 put for the same day, both 44 days out. Our method is always 45 days out. So how do you select the one to sell? Because it's a 30 delta. How do you select the next one? Based on the spread that you want. In this case, we went for a $1 spread. You can go for a $5 spread, a $10 spread. Those are the put bull spreads. Now, to sum it up, you select a very liquid underlying, Tesla, Nvidia, SPX, NASDAQ. You double check all the things that you don't want to have there. You go out 45 days. You sell the 30 delta put. You buy the call below. This was 50 cents. You can go $1 or $5. If you go $5, it's a $5 spread. And then you set a limit order to close the trade at 50% profit. This is a life changer because now you can be fully present with your loved ones. I have 3 children. Now I play with them. I spend quality time with my wife, with my friends. I don't have to think about anything. I don't have to pull out my phone or think about other things. I can be really fully present. And this is important, guys. If you're a trader, if you're an investor, create a system that works while you sleep, that doesn't create anxiety for you. So this is how you sell a put bull spreads. In the options guide, you will find a comparison of the 4 ways of selling spreads with an example. If you would sell Boeing at 180, we go for the put credit spreads, which is another way of calling the put bull spread. IBKR calls it the put bull spread, so I stay with this nomenclature, but there are other brokers that call it a put credit spread, but it's the same. So a put bull spread, as opposed to the other kind of spreads, for Boeing, if it was at $180, you would sell the 160 put, you would buy the 150 put. The market direction, so your assumption, of course, you never know which direction will the market go, but you have an assumption and you think in bets, right? So if your market direction assumption is either flat or up, that's where you want to sell it. The put credit spread or bull spread. Why? To get premium and to limit risk, because it's a defined risk trade. You lose money if there is a sharp move down, which happens sometimes, so stay small with your... But hey, having said that, I'm selling a ton of those, and let's look at our win rates. So this year, so far, I've sold 263 options that ended up winning and 16 that ended up losing. That's a win rate of 94.27%. It's not bad, right? So yes, it can go against you, but it won't go against you frequently. In this case, it goes against you 6-7% of the time. If you use our mechanics, 45 days out, 21 days managing, closing at 50% automatically, delta 30 or even 20, and then you're pretty safe. I do delta 30. But you can go even 20 to be even more safe. So yes, a sharp down move can get you assigned. It happened 6-7% of the time for us. Who's us? In the Sprint Club, It's 245 of us who help each other be better and better. And the max loss is 100 times the difference between the strikes. So that's why the bigger the spread, the bigger the risk. And then your max reward is the premium received. So in this case, the margin required, which means the buying power you use $800 to $837 to lose maximally $837 and to make maximally $163, which in reality will be $80 because you will get out at 50% in our method. And if you do two of those credit spreads, one above the other on both sides, now you have an iron condor. But that's a video for the next time, right? You will find in the Sprint Club a ton of frequently asked questions. What's more risky? What's easier to learn? When to have more spreads on? When to have more cash secure puts on? How to do cash secure puts? All of that you can find in our guide to options income. I am Simon Severino. If you want help building systems that generate money for you on repeat, that compound the money that you earned into even more money while you sleep, join the Sprint Club. It's strategysprints.com. See you on the other side, guys. Oh, I had a bonus. Wait a second. Where's the bonus? There is a bonus. So in the Sprint Club itself, you find the money management tool, which tells you, okay, today the VIX is 20, my excess liquidity is 30,000, my account value is 60,000. How much money can I actually put to work? How much money should be working for me right now? So you put in your inputs here and it will tell you exactly, based on a, I would say, conservative VIX allocation rules, in which range, if you have 100,000, how much should be working for you versus being in cash. And that's the most important thing. So that was my bonus, because most traders go belly up because they don't follow their money management rules, or they don't even have money management rules that they can follow. That's why we meet in the Sprint Club. First of all, because now we have money management rules. And second, because we coach each other, help each other, mentor each other, support each other to actually don't break the rules all the time, so that we stay in the game long enough so that we can compound and compound and compound, while the other traders who are gamblers fall out of the market. We collect premium because we are the casino, not the gambler. See you on the other side, guys.